So in our last video, we looked at calculating cost of goods sold under FIFO, first in, first out. Now we're going to look at how we calculate cost of goods sold under LIFO, last in, first out. So LIFO, okay, is calculated very similarly. But the difference is we're taking the last ones we've purchased and selling those first. So when prices are rising, LIFO is going to have the highest cost of goods sold and the lowest gross profit. So the only reason to use LIFO is for tax purposes, because it will make your net income lower. So if we want to do LIFO, I would recommend, again, we do the same thing we did for FIFO, and that we just select all of these items where we calculated our cost of goods available for sale, and that we copy that down to our LIFO section. Okay, so that way we don't have to redo the formulas. So remember, under LIFO, we're doing last in, first out. Most companies use FIFO, but LIFO is used, but it does present problems because with LIFO now, I'm going to sell my items from my April 29th purchase first. And then I'm going to sell my items from my April 18th purchase and so on. The last items I'm going to sell are the ones from my beginning inventory. So what can happen is that these goods, these items become obsolete and the market price goes below the cost, and they have to be written down under what's called the lower of cost or market rule, which you can read about in your text. And sometimes you just have to completely write them off because they become so obsolete. That's called LIFO liquidation. So LIFO does present some problems. So we know we have 20 items in ending inventory. Again, the question is which 20? So if you recall, we had 123 units available and we sold 103. So we know we have 20 in ending inventory. But in FIFO, it was 20 from here. But in LIFO, it's going to be 20 from here because remember, we're selling all of these first. So we actually have 20 at $14 in ending inventory. And that's going to give us an ending inventory of 280, right? Okay. So that means that, as we said, we sold all of these. We have 20 left in ending inventory, so we must have sold 2 of the items in ending inventory. So we're going to change that to 2. And then if we add these up, we will get our cost of goods sold under LIFO. And it's going to be higher than under FIFO, as we would expect, because we're selling those newer, more expensive goods first. So our cost of goods sold under LIFO is $1814.50. Now, if you recall, we have this formula up here where we said that if cost of goods available for sale minus ending inventory equals cost of goods sold, then we can turn that formula around and we can say cost of goods sold plus ending inventory equals cost of goods available for sale. So just like we did here with FIFO, we should do the same thing with LIFO. And we should make sure that our cost of goods sold and our ending inventory equals our cost of goods available for sale. So let's add that up. And it does. So we should be confident in our numbers. So when we do our income statement under LIFO, the sales are going to be the same, right? We decided we were just doing one set of sales, 103 units at 30 each. So our sales revenue is still going to be $3,090. So we're going to do $3,090. We calculated our cost of goods sold under LIFO, the 1814.50. We know that our gross profit is sales minus cost of goods sold. So it's $1275.50. Under FIFO, it was $1395.50. So lower, as we would expect. Therefore, our net income is going to be lower. It's going to be $475.50, right? We're going to take our gross profit minus our operating expenses. And we're going to end up with a net income of $475.50. So our gross profit percentage, again, should be lower than FIFO. So we're going to take our gross profit and divide it by our sales. And we get 41% is our gross profit percentage under LIFO, or it was 45% under FIFO. So again, when prices are rising, you're always going to expect LIFO to have a higher cost of goods sold. So in the next video, we'll look at average cost, which is used primarily for companies that are selling or producing identical items. So thank you for your attention.